One of the most common things I hear from people when I talk to them about their investments is, I am diversified, or Keith, I think I'm diversified. Well, how does one know if they are diversified unless you know what diversification actually looks like? So what I'm going to talk to you about today is that concept of diversification. But first, let me talk about what I see most commonly in people's portfolios. Usually what I see is people own a lot of stuff. They have a bunch of mutual funds, and therefore they think, well, I'm diversified because I got 4 or 5 funds. Just having 4 or 5 or a bunch of mutual funds or holdings does not necessarily mean you are diversified. Especially, and a lot of times, you might have 3 or 4 funds, but they're all doing the same thing. They're all in US large, or they're all buying the same type of sector and industry. So one of the most common things and mistakes that people make is just by holding a bunch of funds that think they're diversified. In addition, a lot of times what I see is I might have someone that has a bunch of funds, and they might have a couple of different asset classes. What I mean by that is they might have, most commonly what I see is they do have US large. Then the second most common is a lot of times they will have some international holdings. And then finally, I will see once in a while portfolios that have some small company holdings inside the mutual fund. So yes, that is more diversified than having just a bunch of funds doing the same thing. But having something in US large and international and small, while that's diversified, that's only 3 asset classes. There's a lot of other asset classes that are out there that aren't being utilized in a portfolio like that. And I'll talk about that a little bit later on in this video. Third, about being diversified, when I see the inside these portfolios, or I look inside these mutual funds, is how many stocks and holdings are these managers actually purchasing? Surprisingly a lot of times that's not a bunch. I'll see US large stock funds and they might have 80 holdings or 100 holdings. That's not a lot. If you look at the S&P index, which is the most commonly used index for large company stocks, that index has 500 stocks in it. So a large company stock fund with 80 holdings in it or 100 holdings, to me, is not diversified. Same thing on the international side. There's thousands of companies overseas, and I'll look at mutual funds that are invested overseas internationally, and they'll have 83 holdings or 100 holdings. Again, that's not diversified. So again, diversification also means how much stock is inside these funds. And keep in mind, there's tens of thousands of stocks all over the globe. So if your fund owns 30 or 40 or 50 or 100 or even 300 holdings, that's not diversified. So what does diversification look like? I talked earlier about asset classes and different asset classes. If you have a well-diversified portfolio of multiple asset classes, when you start including bonds, there's as many as 18 different asset classes. So are you owning emerging markets? Are you owning truly small company stocks? Do you have any microcap stocks? Do you own any value? Value are the stocks that are underperforming for whatever reason. There's a formula called price to book. So do you have value in the small cap category, in the international category? Do you have value in the large cap category? Overseas, internationally, do you have small company stocks? So there's a lot of different asset classes, up to 18 different asset classes that can be utilized in a well-diversified portfolio. And back to the holdings, again, the key thing is, do you own thousands of stocks, not hundreds of stocks, inside your portfolio? So the question is this, are you really diversified? And if you're not, you need to do something about it and get diversified. Thank you.